Hi, this is Juliet, a young Orfiano. Welcome to my video. If this is your first time on my channel, please like, share, and subscribe so I can notify you if I have a new video. This is the continuation of part 24 about property, plant, and equipment. I discussed in part 24 about the accounting changes and errors affecting property, plant, and equipment. Just click above or the link below this video to watch part 24. In this video, I am going to tackle about the recognition of property, plant, and equipment, and the disclosure requirements. The recognition of property, plant, and equipment. The carrying amount of an item of property, plant, and equipment shall be derecognized on disposal or when no future economic benefits are expected from its use or disposal. When the disposal of the asset resulted from a sale, the difference between the asset's carrying value and its selling price is recognized as a gain or loss. If payment for the item is deferred, the consideration received is recognized initially at the cash price equivalent. The difference between the nominal amount of the consideration and the cash price equivalent is recognized as interest revenue over the collection period. When the asset is retired from use without any salvage value or when it is simply abandoned, a loss is recognized equal to the asset's carrying value. Gains or losses arising from the recognition of an item of property, plant, and equipment shall be included in profit or loss when the item is derecognized. Assume that on June 30, a piece of equipment is sold for cash of 120,000 pesos. The equipment cost is 500,000 pesos and accumulated depreciation is 390,000 pesos. Disposal cost of 15,000 pesos is paid by the company. The entry for the derecognition upon sale is debit cash for 105,000 pesos, debit accumulated depreciation for 390,000 pesos, debit loss on sale of equipment for 5,000 pesos, and credit equipment for 500,000 pesos. Note that the disposal cost is netted from the cash proceeds. Thus, the loss recognized is the excess of the carrying value of 110,000 pesos over the net proceeds of 105,000 pesos, 120,000 pesos less 15,000 pesos. Disclosure requirements. The financial statements shall disclose for each class of property, plant, and equipment. A. The measurement basis used for determining the gross carrying amount. Letter B. The depreciation method used. Letter C. The useful lives or the depreciation rates used. Letter D. The gross carrying amount and the accumulated depreciation aggregated with accumulated impairment losses at the beginning and end of the period. And letter E. A reconciliation of the carrying amount at the beginning and end of the period showing 1. Additions, 2. Disposals, 3. Acquisitions through business combinations, 4. Increases or decreases resulting from revaluation and from impairment losses recognized or reversed directly in equity. Number 5. Impairment losses recognized in profit or loss. Number 6. Impairment losses reversed in profit or loss. Number 7. Depreciation. Number 8. The net exchange differences arising on the translation of the financial statements from the functional currency into different presentation currency, including the translation of a foreign operation into the presentation currency of the reporting entity. And number 9, other changes. The financial statement shall also disclose A. The existence and amounts of restrictions on title and property, plant and equipment pledged as security for liabilities. Letter B. The amount of expenditures recognized in the carrying amount of an item of property, plant and equipment in the course of its construction. Letter C. The amount of a contractual commitments for the acquisition of property, plant, and equipment. And letter D. If it is not disclosed separately on the face of the income statement, the amount of compensation from third parties for items of property, plant, and equipment that were impaired, lost, or given up that is included in profit or loss. If items of property, plant, and equipment are stated at revalued amounts, the following shall be disclosed. A. The effective date of the revaluation. Letter B. Whether an independent valuer was involved. Letter C. The methods and significant assumptions applied in estimating the item's fair values. Letter D. The extent to which the item's fair values were determined directly by reference to observable prices in an active market or recent market transactions on arm's length terms or were estimated using other revaluation techniques. Letter E. For each revalued class of property, plant, and equipment, the carrying amount that would have been recognized had the assets been carried under the cost model. And letter F. The revaluation surplus, indicating the change for the period and any restrictions on the distribution of the balance to shareholders. The face of the financial statements and the accompanying notes contain the required disclosures stated. For exploration and evaluation expenditures, an entity shall disclose information that identifies and explains the amounts recognized in its financial statements arising from the exploration for and evaluation of mineral resources. Thus, an entity shall disclose A. Its accounting policies for exploration and evaluation expenditures, including the recognition of exploration and evaluation assets. And letter B. The amounts of assets, liabilities, income and expenses, and operating and investing cash flows arising from the exploration for and evaluation of mineral resources. If during the period the enterprise capitalized some borrowing costs, the enterprise should disclose the amount of borrowing costs capitalized and the capitalization rate used to determine the amount of borrowing costs eligible for capitalization. Thank you for watching my video. I hope you learned something from this video. Don't forget to like, share, and subscribe on my channel so I can notify you if I have a new video. Once again, this is Juliet Orfiano. See you on my next video.